Canada is expected to keep interest rates on hold today, but a string of rate increases probably lies ahead. Canada's economic recovery well underway. We are joined now by Rob Tetreault, Senior VP and Portfolio Manager at Tetreault Wealth Advisory Group, Canaccord Genuity. Rob, great to see you. Thanks for coming on the show this morning.
Hey, great to be here, Andy. Thank you for having me.
Do you think Tiff Macklem is feeling the heat to start talking about rate increases possibly early next year?
Yeah, I don't think he has a choice at this point, right? Like everyone knows this inflationary pressure is what could lead Tiff and his team to obviously change the overnight rate, that bank interest rate that's been at 0.25% now, what feels like forever. So that pressure is definitely there. The job numbers that came last Friday, oh my goodness, they were so positive. The core, both on the cost of goods and cost of services, both the CPI, it's moving so much. I don't think he's got a choice. Every economist from every bank is telling him to start thinking earlier. Initially, he had said middle quarters of 2022, but every economist is now saying, listen, you got to get this starting now. So not expected to see anything today, but January is not out of the equation, I would say, Andy.
Well, I mean, obviously this is going to be discounted by investors and home buyers, homeowners in advance. But once he actually pulls that trigger and raises rates, do you expect a big reaction?
Do you mean specifically on the purchasing of homes, or you mean the cost of shelter?
I meant purchasing of homes and the price people are paying.
Yeah, I don't think that'll move that quick because, human nature will be to panic initially, but I don't think it'll have much of a longer term impact. I do think the bond rates have moved already in anticipation of that, and we expect to see that to continue. I think the bigger concern is, is this going to be enough, right? We're at a quarter point. You look at where we were 10 years ago or 15 years ago, you look at what the Bank of Canada has done, continued printing money. The problem with printing money, we all know, more dollars chasing fewer goods, you're going to get that inflation. And think about the restaurant owner who went from charging $15 for the lunch special to charging $20. We're talking about transitionary inflation, right, Andy? So is that transitionary inflation really going to go back if we're looking at 12 months down the line? Do you think that restaurant owner is now going to charge $15 for his lunch again after charging $20 to combat the fears and the increase in price that he had to pay for his lettuce and his buns and his cheese? Do you think he's going to go back to charging $15? I think that inflationary pressure, transitionary inflationary pressure, is likely to be less transitionary than you think. So a call for us TPI to settle down a little bit, but to expect not for it to taper as quickly as we thought.
That's a good example. If I'm running a restaurant and I do put my price up, how inclined am I going to be to put it down after this inflation goes away?
Yeah, and think of services too, right? You're getting, you're getting a shave or you're getting a shoe shine or whatever it may be. So if those things still exist, and you used to pay $20, now you're paying 25 or 30 or 50. I don't know what you're paying for a haircut, Andy, but are you going to go back down to paying 40 after it went to 50 for a service, right? Probably not, right? Because that job pressure, the fact that there's less barbers and shoe shiners now, because clearly we have people that have exited the wage force, specifically on the service side, means supply and demand, we all know, means, higher cost for that shave and for that shoe shine. So are you likely to pay less in a year from now? Probably not, but it might decrease. The inflation might stop, might kind of hold back, but it's expected to still stay there.
Yeah, it's interesting, Rob. This is not scientific, but it seems to me that the cost of repairing a flat bicycle tire in Toronto has now gone to about $40, and it was $20 or less before the pandemic. So, yeah, it's pretty widespread, this services inflation.
$150 I paid last night for a Christmas tree, Andy, and I thought I would never in my lifetime pay that much for a tree. And I'm embarrassed to say I did. But I mean, there were 3 trees left at the lot here. Winnipeg, in south end of Winnipeg at the nursery, 3 trees left on the lot, and it's December 8th. So yes, I think the shortage of goods is causing. We paid $50 last year, so there you go. Christmas tree inflation is here, 300%.